Hello, everybody, and welcome to today's Tech Talk. We will be covering transforming business processes with an agentic mindset for finance and operations. My name is Bandy Tobez, and I will be your moderator today. We are broadcasting this session through Microsoft Teams. This session is being recorded on behalf of the Microsoft Corporation. When you join this event, your name and email address may be viewable by session organizers. By joining, you're agreeing to this experience. The recording will be made available in the Tech Talks Community Dynamics page in the upcoming weeks. If you have questions for presenters or need support, please use the Q&A panel located on the right side of your screen. If you wish your name not to be visible to organizers or session participants, please post your questions anonymously. Our presenters will be responding to your questions, and we'll have a live segment of Q&A at the end of the presentation. Now, we'll turn it over to our presenters. Nicole, over to you.
Thanks, Mandy, and welcome everyone. I'm going to get us started with some introductions of all of your presenters today. So my name is Nicole Joyce. I'm a principal program manager here at Microsoft. I work on our FastTrack team, which is part of our engineering organization that brings you this great Tech Talk series. You can see my email address and my LinkedIn information to connect with me here on the screen. The QR code will also get you to my LinkedIn profile. I'm going to leave that there for just a second, and then I'm going to turn it over to my colleague Alejandra to introduce herself.
Hi, everyone. Thank you for joining to this great Tech Talk. My name is Alejandra Cabrales. I'm a senior solution architect, part of the FastTrack team as well. That is my email contact and my LinkedIn, so you can get in touch with me.
Thanks, Alejandra. I'm going to advance us now to Priyanka. Priyanka, go ahead and introduce yourself.
Hey, thanks. Hello, everyone. I am Priyanka Sinha, a senior solution architect at Microsoft, part of FastTrack team, based out in India, specialization in Dynamics 365 finance and operation and AI-driven solutions. And yeah, you can see my email and LinkedIn details here mentioned. Pleasure to have you all here. Thanks.
Thanks, Priyanka. And we also have a presenter joining us from Mavim today. So I'm going to let Leo also introduce himself.
Thank you. Hello, everybody. Leo Solomons here from the Mavim Americas organization. I had the value engineering team. And in that capacity, we collaborate with the Microsoft FastTrack team to incorporate the business process catalog, capturing all of the Dynamics 365 processes and artifacts in Mavim to be utilized to help forward digital transformations. Very happy to be here and looking forward to this presentation.
Yes, thanks for joining us, Leo. All right. So our agenda for today is we are going to start with an introduction to looking at business analysis with that agentic mindset. That's really the encompassing topic for today's presentation. But we're also going to talk about just the anatomy of a business process. And then we're going to give you really the core of the presentation is how do we reimagine some of the business processes that we have for some of our core Dynamics business applications, such as supply chain, finance. We're going to go over project operations and HR today. So we'll give you a real business process that's in the Mavim business process catalog and how it can be reimagined with AI and agents. So let's start with that introduction and talk about how do we look at business analysis today with an agentic mindset. So today's business landscape is really rapidly evolving, really every week or every day even. So the role of a business analyst has now also significantly expanded beyond the typical documenting requirements or mapping just existing workflows. So a modern business analyst has to think holistically. Oh, let me go back one slide. We have to think holistically in terms of that end-to-end process, focusing on the broader flow of work rather than those kind of individual isolated tasks. So this includes identifying, your key handoffs between roles, pinpointing where the delays are, and understanding where decisions are made or should be made. So by separating that work, decision, and data, analysts can really look at where are the inefficiencies, any redundancies, and maybe misalignment between systems and human teams. So a critical shift in the mindset is designing for progressive maturity. So that's beginning with clarity on the process, advancing to efficiency, and then we layer in intelligence. And finally, after that, we can reach autonomy. So with the rise of AI and agents, analysts must be able to determine where human judgment remains essential versus where it can be augmented or entirely replaced with automated systems. So ultimately, the modern business analyst is not just a documentarian anymore, but also a transformation leader. So someone who orchestrates how work gets done across people and systems and intelligent agents. So this capability is essential to ensure that organizations don't simply digitize like an inefficient process, but understand how to fundamentally redesign the process for scalability, adaptability, and measurable business value. So we've established that the modern analyst isn't just documenting processes, they're actually going to redesign them for scale. So this slide is showing you that roadmap for how to do that. So we have 4 pillars here in the maturity journey, and each kind of builds on the last. So pillar 1 is that process foundation. So you have to understand and then redesign before you automate. So we need clear roles, clear decisions, a clear flow, because we can't automate a process we don't understand. When we get to pillar 2, that's your agentic augmentation. So this is where AI starts assisting in the process. So helping with decision making, data validation, and interpreting content. So nobody is being replaced. You're just shifting from a manual to an assisted process. When we get to pillar 3, that's where we start to have some agentic orchestration. So now agents can actually coordinate across systems, cut handoffs, and eliminate some delays. So instead of just being assisted, it's now actually orchestrating workflows. And finally, when we get to pillar 4, we have that autonomous operation. So the agents can actually trigger an action. They can predict outcomes and kind of optimize on their own. So this is that full agent operated process, but it's built on the foundation from step 1. So now kind of how do we know where to start? So let's look at specific signals in the process that tells you where AI is going to add the most value. So we laid out those pillars. And so now how do we prove that it's working, right? So this is what our agentic value measurement framework is for. There's 7 categories, and they each measure a different dimension of agentic value. So it starts with productivity, which is the most intuitive one. And it's just asking kind of, are we saving time, right? Are tasks getting done faster? Are we tracking time per task, throughput, automation rate, and are those getting faster? If we move to quality, the question becomes, is the output better, right? Do we have fewer errors in the process? Do we have a higher first time right answer rate, right? Do we have less rework that is needed? And as we continue to move on to efficiency, this is all about speed, right? So cycle times, our SLA compliance numbers. So are we moving faster end to end in a process. When we look at experience, this is really the human side, right? Our customers and our employees happier. So when we look at metrics like our CSAT or our employee satisfaction are going to tell us that story about the experience. Then as we move to the last three on the bottom here, adoption is one that people tend to miss, right? We have to make sure teams are actually using agents, right? So when they do, are they also trusting the output or are they just overriding it constantly? When we look at financial impact, this is the one that ties to your bottom line, right? So cost per transaction and lift. This is really what the business leaders want to see. And finally, but absolutely not least, is your risk and compliance, right? So are we maintaining a level of control? We have audit compliance rates and exception tracking that ensure we are not trading the speed, right, for risk. So the takeaway here is really that you don't need all 7 of these, right? On day one, you should pick like 2 or 3 that matter most to your business stakeholders and build from there. So let's look at how to identify some specific process signals where AI can add the most value here. So identifying where AI can add that value begins with recognizing the signals within the business process that indicate that there is inefficiency or risk. So some of those common indicators would include things like rework loops, right? Where tasks are repeatedly corrected, or manual data re-entry, right? Maybe across different systems, which increases the likelihood of errors. Or long approval cycles, right, that slow down human decision making. And inconsistent decisions, right, driven by maybe really subjective judgment or a lack of standardized criteria to arrive at the outcome. So another major signal is reliance on emails or informal communication channels such as chats, which often lead to this lack of traceability or accountability. And then additionally, processes that depend heavily on tribal knowledge, so information that is known only to certain individuals, and it's usually in just their memory and not actually even written down, that really poses a risk to scalability and business continuity. So once you identify these signals, they can be mapped, right, to the kind of appropriate technology interventions. So for instance, if we look at the first row in this table and we read it across kind of from left to right, for repetitive tasks that can be automated using workflow tools, right, such as Power Automate or Logic apps we have identified here. While if we look at something like decision bottlenecks, a couple of rows down, that can be addressed with, AI-driven agents that provide recommendations or even execute maybe predefined actions, right, that have passed evaluations and output can be trusted. So understanding these patterns is what's allowing organizations to prioritize improvements that are delivering the highest value. So really importantly, AI should not be viewed as this blanket solution. Targeted enhancements that's addressing specific process weakness and ensuring that the improvements are meaningful to the business, but also sustainable. So to wrap up our section here about this agentic value measurement framework, this table gives you like a consolidated view of 7 metric categories, and think of it as kind of a cheat sheet. So each row maps to a category, to what it measures, and gives you the specific metrics you could start tracking today. So the left column is kind of your what, the middle is, why, and the right is telling you how. So productivity and efficiency are typically where organizations start because that ROI is the easiest to quantify, right? What time are you saving? What tasks have been automated? How much have you reduced cycle times? And then quality and experience, these are really where you can prove that speed isn't coming at the cost of accuracy in your process or customer satisfaction. So these are metrics that are kind of keeping you honest. And then adoption, that should be your leading indicator. If people aren't using the agents or if they don't trust them and they're overriding them, you have that problem with the trust, not the technology, right? And then financial impact, that's your executive summary metric, the one that gets the budget approval and the executive sponsorship. And of course, risk and compliance that ensures, again, you're not sacrificing the governance for the speed. And especially if you're in like a regulated industry, this is really critical. So our recommendation here is really, again, pick 2 or 3 categories that align with your stakeholders' priorities and establish those baselines before deploying agents and then measuring the delta. So that's how you're going to build that business case for scalable agent capabilities across your organization. All right, I am going to hand it over to Alejandra to walk us through the next section on diagnosing before design. So Alejandra, take it away.
Thank you, Nicole. All right, so we've talked about the transformation pillars and how to measure value. Now let's get into the diagnostic side of things. Because before you can fix anything, you need to know what's actually broken. This is the root cause analysis framework, and it works across 4 dimensions: people, process, data, and technology. Think of it as your diagnostic lens. On the people side, you're looking at things like skill gaps, change resistance, unclear ownership. Here, you may ask, are the right people in the right roles? Do they have the training they need? In the process, it's about efficiency, consistency, and workflow integrity. The questions you may ask here would be, are steps missing? Are different teams doing the same thing in completely different ways? So now moving to data. Data covers quality, accessibility, and governance. If your data is inaccurate, siloed, or unmanaged, no amount of technology will save you. And technology. This is where everyone wants to start, but it should actually come last. Here you may ask, are your systems modern enough? Do they talk to each other? Are you even using the right tools for the job? So here's the key insight. These 4 dimensions overlap. Most problems don't live in just one quadrant. For example, a reporting issue might look like a technology problem, but the root cause could be data silos created by process gaps managed by untrained people. And remember this line again, you cannot automate a process that you don't understand. That's the foundation everything else builds on. Next slide, please. So now let's make this real with some examples. This table shows 4 common scenarios where organizations jump straight to a technology solution. And here's why that's almost always the wrong first move. Take the first one. Reports take 3 days to generate. The instinct is AI to automate the reporting. But when you actually diagnose the problem, you find that someone is manually pulling data from 5 different spreadsheets that don't talk to each other. The right solution, you may need to centralize your data sources first. Then you can automate. Second example, customer complaints about slow response times. As a solution, you can say deploy a chatbot, for example. The real issue is that your support team can see the order history because the CRM and order system aren't integrated. So you need to fix that first. The third example is sales forecast is constantly wrong. An immediate solution would be, we need matching models. Not really. Your sales team may not be even following a standard process. Garbage in, garbage out. You need to standardize your methodology first then layer in analytics. The last example, data entry errors are going up. Before you add more validation rules, you can ask, did anyone train the staff on the new system? Sometimes the answer is a training program, not more technology. The pattern here is clear. Technology is rarely the first answer, but data creates bad predictions. Broken processes create broken automation. So AI amplifies whatever is already there. So make sure what's there is worth amplifying. Next slide, please. So what does all of this mean for the business analyst role? As Nicole mentioned, it's evolved significantly. Let's talk about three shifts that define the modern business analyst in an agentic world. First, the 4 dimensions. Traditionally, business analysts focus on documenting requirements and translating between business and IT. That's necessary, but no longer sufficient. In an agentic world, you need to diagnose root causes across all 4 dimensions: people, process, data, and technology. If you only look at one, you'll miss the real problem. Second, the amplification effects. This is critical. AI doesn't create problems or solve them on its own. It amplifies whatever the patterns already exist. If your processes are solid and your data is clean, AI accelerates your success. But if your foundations are broken, AI just makes the failure faster and more expensive. Your job as an analyst is to evaluate which scenario you're walking into before anyone deploys technology. Third, a strategic judgment. This is the new mandate. It's knowing when to recommend process improvement over automation, when to invest in training instead of buying another tool, when data governance should come before any dashboard project. Not every problem needs a technology solution, and the analyst is who can make that call and that becomes indispensable. Bottom line, if you master this 4-quadrant diagnostic framework, you become the person who ensures your organization solves the right problems the right way. So now I will be handed over to Priyanka to go through the anatomy of the business process.
Thanks, Alejandra. So this slide shows the core Dynamics 365 finance and operations product at the end-to-end business processes they map to. Think of these as your starting points when scoping an finance and operation project. So if you see here, supply chain management maps to the source to pay process that covers your accounts payable and procurement and sourcing modules. This is the journey from identifying a need through vendor payment. And then we have finance, which is mapped to record to report, your general ledger and costing, everything from recording transaction through producing the financial statements. And then project operation is project to profit, end-to-end project delivery from initiation through billing and revenue recognition. Commerce maps to order to cash. This spans retail, sales, and marketing from customer order through revenue recognition. And then we have field service, which is mapped to service to deliver, on-site service delivery and scheduling from work order creation through completion. Then at the bottom, you will see 2 cross-cutting process areas. Product-centric organization use design to retire. That is your product information management and pricing. Service-centric organization use concept to market, service item management and pricing. Now, here is the important caveat we will cover in next slide. Can we please move? So this is the most important key takeaway from this section. So I want to pause here because this is the mindset shift that changes how you approach every FNO implementation. So we just showed you 7 product to process mappings, but here is the thing. No single product cleanly aligns to a single end-to-end process. In the real world, supply chain implementation doesn't live in source to pay. It touches inventory management, it crosses into production planning. Sometimes it also connects into commerce and order fulfillment. Yes, the business process catalog lets you filter by application, family, or product. And that's useful as a starting point. But if you let the product filter define your project's scope, you are going to miss critical hands off and dependency between processes. So, the right approach, and this goes back to what we said about the modern business analyst, that is to start with problems. What are the business problems you are trying to solve? Then map the processes that address those problems, and only then you select which technology and products fit. Problem first, processes second, technology third. If you flip that order, you end up uh, automating the wrong things or missing the bigger picture entirely. Let's keep this principle in mind as we move into our next section. So, before we go deeper into the catalog and some examples, I want to take a step back and talk about how we define a business process. When thinking about and documenting business processes, a good standard to use as a starting point is standard called IDF0. And if you haven't come across it before, it is a structured way to describe any process by breaking it into 4 key elements. You can see them here. Every process has input on the left, that's the data flow um, into the process, controls at the top, the rules and the constants that govern how the process runs, and then output on the right, which is results which the process produces, and resources at the bottom, the people and the system that actually execute the process. So this framework is important because it gives us a consistent language for describing the processes at any level of catalog. Let me walk you through a concrete example creating a case in customer service. So if we click, it will give input as example. So starting with your input, when someone creates a case, we need a contact or account record to associate it with, a case category and priority level. Also, description of the problem and the channel it came in on, whether that could be phone, email, or chat. These are the things that must exist before the process can start. Now, if we click again on the control, now the control, these are the guardrails. SLA policies and entitlement determine the response time commitments. Case routing rules dictate where the case gets assigned, and the business unit permission control who can see and act on it. So these aren't the things that agent decides in the moment. They are set up ahead of time and govern the process automatically. Now, if we again click and check about the output example. So here, when this process completes, we get a case record created in D365, a notification sent to the assigned agent, an SLA timer that start tracking against the response commitment, and the case gets added to the appropriate service queue. So these are the tangible results. Now, if we see resource, so Finally, resource the customer service agent who handles the case, the Dynamics 365 customer service application, where it all happens, and the knowledge base articles they reference to resolve the issues. Without these resources, the process can't execute. This IDF zero pattern can apply to every process in the catalog where it's creating a case processing, a purchase order, or running payroll. When you are documenting or extending the catalog, always think about these four elements. Those are very important and key. Now, yeah, we'll move to next reimagining processes, and I will hand over to Nicole.
Yeah, thanks, Priyanka. So now we're going to walk you through some of our business processes from the catalog. And again, if you remember from the agenda, we're going to cover several different products, including supply chain, finance, project operations, and HR. So let's get into this section. So I'm going to start with our supply chain process. So let me walk you through a real engagement. We've got our Kintoso Manufacturing Company. They're a mid-size industrial supplier. They've got 12 buyers who manage over 600 open POs. Those are purchase orders at any given time. So their procurement director came to us with a clear goal, cut the time that the purchasers are spending on routine follow-ups by 70% and get the purchase orders confirmed on time. So let's follow the flow on this slide. So we've got a buyer who creates a purchase order in Dynamics 365 in supply chain management, and they email the vendor. So then they wait, right? No confirmation may come back for days, and then the PO, it just sits there unconfirmed. So the buyer starts now having to chase manually the vendor, right? They're hand drafting reminder emails, one per vendor. So if and when, right, our vendor finally replies, it could be a free text email or have a PDF attachment with maybe date or quantity changes for that purchase order. So the buyer then has to read the email, go back and open the purchase order in Dynamics, rekey the changes line by line. And then ultimately, when any late deliveries surface in our planning system, the buyer is potentially chasing this again. So really look at the pain points at the bottom of this process. So we've got over 30% of our purchase orders that are going unconfirmed past their lead time. Buyers who are sending 2 or 3 follow-up emails per purchase order on average. Vendor replies that are having to be interpreted by hand, right? And then changes that are rekeyed manually line by line. And then ultimately, what's really impactful is we have no impact analysis on those potentially late receipts. So every email and every data entry step is manual. So this is kind of the broken process that we're starting with for our customer. So when the business analyst team digs into this process during discovery, right, they found these 3 structural issues, right? First is that manual vendor follow-up that they're doing. The purchasers are chasing those unconfirmed POs and late deliveries. They're hand drafting those one-off emails, right? Vendor by vendor. So there's no automation, there's no template, there's no batch processing running in the background. Every follow-up is manual. Secondly, we have those unstructured inbox replies. So vendors who are either confirming or making change requests are just arriving right as those free text emails or potentially attachments. So somebody's reading it, interpreting it, deciding what has to be changed, and then rekeying those into the purchase order in the system. So that's not just a slow process, it's really error prone. And then third, and this one really hurts again, is that downstream impact, right? So when a supplier changes a delivery date or is adjusting a quantity, those changes have a ripple effect, right, into your safety stock calculations, your production schedules, transfer orders, and any customer commitments that you've made. But nobody really sees that impact until it's too late then to act on it. So the business goal is pretty clear, right? Cut that purchaser time on the routine follow-up by that 70%, ingest those vendor replies automatically, and surface that downstream impact of any change request before the buyer is actually accepting it. So let's look at how agents can potentially help with this process. So here's the open purchase order management process. This is from our catalog and broken into kind of its core tasks. So right now, every one of these steps is human effort, right? We're updating the purchase order information, we're monitoring its status, we're communicating with those suppliers, then potentially making updates to the purchase order, and ultimately, when the goods arrive, we're receiving them, handling any returns that may need to go back to the vendor, and closing the PO. So we're not changing this process, right? But we are changing who does which task, right? So let's look at what phase one may look like with agents at the bottom swim lane. So we're not going to automate the entire journey, right? We're just starting with one verb. So we're starting with communicate with the suppliers. So an agent that is monitoring the unconfirmed POs, drafting and sending follow-up emails on a schedule, and ingesting the vendor replies. So now it serves any buyer, any product line, and not just one flow. So it's a reusable agent that can beat hundreds of just single-use automations. So for partners, implementation partners out there, you can package this, right, as a focused pilot with a clear success metric, right? Response rate, time to confirmation, and the follow-up volume reduction. And you can start here by configuring a first-party agent. We have our supplier communication agent, and not having to start with a custom-built agent. But if we look at phase two, we can potentially add some more verb agents here. We can monitor our purchase order status and update our purchase order as well. So monitoring agent watches for POs approaching or past their lead time and can flag them proactively. The update agent would ingest those vendor changes and pre-populate the PO changes for the buyer to review. So we still have that human in the loop where the buyer is owning the judgment call, right, to accept the changes, maybe escalate an issue, or still be the person who's managing the supplier relationship, but under proper guardrails, right? The security, the approval workflows that you use today, and having all those audit trails. But the agent is handling the mechanism of the work while the human buyers are focusing on the decisions that need to be made. Also be done with a first-party agent today when we look at our supplier communication agent for supply chain. And maybe then we look at, let me go back. There was a phase three. I just did not have the automations in there, but that would include things like extending the agents across the remaining steps in the flow. So this is where you're actually handling the physical goods, right? Receiving them, potentially preparing returns, or closing out your purchase order documents. So now if you build custom agents, right, for these flows, you're now operating this very human-led but agent-operated process. So each new verb agent that we introduce is delivering visible ROI that can help give you the business justification to fund, right, the next engagement. So with that supply chain example, I'm going to hand it back to Alejandra, who's going to walk us through the same pattern, but applied to our finance application. And specifically, she's going to go over our month-end close.
Thank you, Nico. Let me take you to another real scenario, this time in finance. So same company, manufacturing, Consorcio is the mid-sized industrial supplier running D365 finance across 12 legal entities in 4 countries. Their corporate finance team, the 18 accountants, owns the month-end close. Today, that close takes 8 business days with the CFO, and the CFO doesn't get the consolidated financials until day 9, which is too late to act on anything meaningful. So follow the flow on the slide. Subledger close kicks things off, right? AP, AR, inventory, fixed assets, payroll, all closed in sequence, not in parallel. Nobody moves until the prior module is done. Then come 800 plus manual journal entries every month posted from spreadsheets. Intercompany reconciliation across all 12 entities done by hand in Excel. Account reconciliation, each account tied out manually. And adjusting entries as last-minute corrections. And finally, consolidation and reporting, where financials emerge on day 8. Now look at the numbers underneath. This is where the real pain shows up. 3 days lost waiting for upstream teams to finish their subledger close. 15% of journal entries reposted due to errors. 4 full days to clear intercompany mismatches. 120 accounts reconciled by hand every month. And external auditors flag 18% of posted entries for documentation gaps or missing approvals. The team is exhausted with this, and well, this is kind of an example, or that could be very painful for the finance team. So now moving to the next slide, please. When the business analyst team spend a full close cycle embedded with the finance team, there's 3 structural issues surface. First, the disconnected subledgers. AP, AR, inventory, and fixed assets each close in series. There's no orchestrator that triggers the next step when the prior one finishes clean. Accountants spend the first days of every close just chasing the status, Teams messages, short spreadsheets, phone calls, trying to figure out who's on and who's blocking them. Second, the logic lives off system. The adjusting entry logic like accrual calculations, allocation formulas, reclass entries lives in senior accountants' heads in a folder of Excel macros and not in D365 rules. The third, audit surprises. Exceptions are found by external auditors, not by companies' own internal controls. So that rework doesn't land during close. It lands afterward, adding at least another full day on effectively forcing the team to close the books twice. So the business goal is clear, reduce the close time. And with that, they would be recovering a full business week, almost a full business week every month, and reduce basically the time and the exhaust work for all the finance team. So to be audit ready and shift the time from 75% mechanical work to 70% analysis and only the 30% mechanical. So moving to the next slide, here's the month and close process broken into its core tasks. And at the same pattern as Nicole demonstrated, we're not changing the recipe. We're just changing the who does which part. So start with one agent, an account reconciliation agent that makes accounts, recommends best actions on exceptions. And with that, then the conciliation for the CEO and the CFO ready summary will be generated correctly. No more adjustments landing 2 weeks post-close. A phase 2, we can use another agent, for example, finance agents in M365 to help you prepare data, surface anomalies, mismatches in journal entries, or matching intercompany invoices across legal entities. Another phase, the phase 3, could be, for example, an agent that is a close orchestrator built in Copilot Studio that monitors each subledger status, triggers next close a step when the prior one finishes clean and escalates blockers automatically. Those 3 days lost waiting for upstream teams are gone, and no more chasing status in teams. Accountants, controllers still review and approve, but the mechanical gathering, matching, and formatting is handled. 3 phases, each one delivers measurable ROI. Days shift off the close, errors prevented, and audit findings avoided. And with that, I'll hand it over to Leo, who's going to take us through a demo in Mavim.
Yes, thank you, Alejandra. So what we're going to see next as we progress to the next slide is a quick demo of how this all is actually accomplished in a business process management tool like Mavim, which houses the business process catalogs, those processes that we saw in the prior slides, addressing all of those functions and areas, and especially when we are integrating those agents and migrating these activities over to those agents, we want to properly represent them, and thus capturing them in the process flows, which we are going to see now. So Nicole, go ahead and trigger the video. So what we're seeing here is the front end of the application. And what we're going to do is go into the configuration studio to that same process, in this case, the reconcile ledger and sub ledger from the prior example. And we're going to start by bringing in those very actors, which are the agents that we want to include now as execution for those activities. And as we go down, we see here the list of agents, which we go down and select the account reconciliation agent that we're now going to introduce into the process flow. And now we can start moving those activities corresponding to the verbs one by one into that lane, indicating that these now are being executed by that particular role. And once we save this, we have this now documented in the system. And so we can now migrate over to the front end, which is where the information is consumed by the end users. And after a quick refresh, we will see that now the agent is represented in the process with those very activities as well. And in addition, because of the features of the Mavim platform, we also have additional information pertaining to the execution of those activities, those verbs, by the agents in the system as well, including also the relationship and fields. So in short, Mavim as that enterprise transformation facilitation tool based on the business process catalog and the business process modeling allows you to do that first step that we've been speaking of, which is understand your processes first, document them properly prior to the actual automation of them. With that, I want to hand it back over to Nicole and conclude this part of the demo.
Thanks, Leo. I think that really helps tie it together into our business process tooling. So we're going to go over 2 more processes, and Priyanka's going to walk us through project operations, tracking project expenses, and then an HR onboarding process example as well. So Priyanka, take it away.
Yep, thanks, Nicole. So here we are going to talk about the business process tracking project expenses from project operation. And the scenario here is Contoso Consulting USA is a professional services firm that implements ERP solution for various organizations. Their consultants process thousands of expense reports, and the entire reporting cycle is manual, creating delays in submission and approval across the board. It starts with finding and collating receipts, a manual task scattered across emails, camera rolls, and mobile apps. Then uploading those receipts, which is tedious and regularly leads to missing documentation. Creating individual expense lines, a repeated manual task for every flight, hotel meal, or cab ride. Providing accurate description that require manual validation, and then responding to reminders from a manager, alerts that land in FNO or on a mobile device, completely disconnected from the consultant daily work in Teams or Outlook. And finally, submitting the report for approval, which just adds to the perceived administrator burden in an already busy organization. Look at the friction points: 30 to 60 minutes of manual effort per expense report, 12 minutes on average just to verify receipts, the entire process repeated for every single line item, and then manual review and reconciliation on the finance side, and constant back and forth handling multiple reminders before anyone actually submits. Consultants would rather be billing client hours, and who can blame them? Now moving to next slide. When the business analyst dug into the expense process, three core issues came to the surface. First, employee delay submitting expense reports. It's not laziness. Manual reporting is genuinely time consuming. That's lead to the processing backlogs and reduced financial visibility. The finance team can't accrue project cost they don't know about, which throws off project profitability reporting. Second, multiple receipt types creating complexity. Flight, hotel, ground transportation, meals, managing travel receipts across different categories and format makes expense reporting error prone and slow. A single business trip can generate a dozen receipts in 5 different formats. And then third, administration overhead for finance teams. Every reports needs manual review, which increases effort, slow down approvals, and raises the risk of errors and policy violations slipping through undetected. Now, the pattern here, if you see, is from what Nicole and Alejandra showed. People, processes, data, and technology problems all tangle together. Now, let's see how agent untangle them. Let's go to next slide. Here, the expense tracking process simplified into core verbs. Every one of these step is human effort. Employee or consultant need to collect all the expenses, receipts, create expense line, group them, and then there will be alerts, as we mentioned earlier. Now let's reimagine with agentic mindset. Same approach, keep the same recipe. Now we are just changing who handle each task. In this use case, we are bringing expense agent. So as part of first phase one, start with one verb. Here the agent lets consultants share or upload receipts directly from their daily work tool, snap a photo, forward an email, or drop files in Teams. The agent extract the data, categorize the expense, create expense entries, create a report description based on available information, pre-populates the line item automatically. That is the most painful step becomes the easiest one. Now, if we go to phase two, uh, yep, the agent now logically group the expenses and creates the report with the relevant title and project context. No more manually assembling everything into a coherent submission, and instead of generic F&O notification, nobody checks. It sends reminder with the consultant daily work context, a team message that says you have 3 unreported trips from this month, right where they already are, and group based on trip or project. Then, as part of phase three, the consultant reviews, make edits if needed, and submit the approvals. All documentation is pre-attached, policy checks are pre-run, and the approval workflow triggers cleanly. The agent handles the mechanical work, the human makes the final call here. Now, let's look another scenario of from HR. Next slide, please. So here, the scenario is that Contoso is a mid-sized company planning to expand its workforce globally by 10%. That's exciting growth, but onboarding is the bottleneck. Fragmented process demands significant HR effort and time for every single hire. Here in this flow, it starts with hiring, recruiting, and selecting candidates, then creating the employee profile manually, and that alone takes average of 15 minutes per hire. Assigning leave plans, a tedious task to identify and apply the correct plans based on country, role, and employment type. And similarly, assign benefit package, finding the appropriate plan and enrolling new hires. Assigning compensation plan, again finding the right plan structure and applying it to each individual. And finally, a new employee is officially onboarded. Look at the friction underneath. Numerous discrete activities just to bring one person on board. 15 minutes on average for a single employee profile. Multiply that across hundred of hires in a global expansion, and it becomes a serious bottleneck. Then finding the appropriate leave plan, benefit plan, compensation, each one requiring manual lookup, cross referencing, policy documents, and data entry in a separate part of the system. HR and end up with spending more time on administration than on the people they are onboarding. Now moving to next slide. When the business analyst identified four issues in the onboarding process. Uh, so first is basically time consuming manual onboarding. The process is inefficient, increase administration effort, directly delays how quickly new employees become productive. HR staff spend their days on data entry instead of crafting a great employee experience. Second, fragmented process. Disconnected onboarding system create fragmented workflow with unclear hands-off and inconsistent tracking. Benefits live in one module, compensation in another, and then leave is in another. Nobody has the complete picture of where a new hire actually stands. And then third limitation or issues is would be limited visibility and insights. Without centralized tracking, it's difficult to monitor onboarding process, identify bottlenecks, or measure what's actually working and what's not. When something falls through the cracks, and it does, nobody knows until the new employee raises a flag. And fourth one is lack of personalization. Generic one size fits all onboarding causes disengagement and slower ramp up. A software engineer starting in Munich needs a fundamentally different onboarding path than a sales representative in Dallas. But the current process treats them identically. So these four issues that compound with scale, the more you hire, the worse each one gets. This is exactly where agents make dramatic difference. So let's go to next slide and see how we can reimagine these processes. So same pattern applied here. Uh, if it's same flow, and let's start with phase one, um, where uh, let's focus on one agent focusing on employee creation. When a candidate accepts an offer, the agent pre-populates the employee profile using data already captured in the recruiting system. Let's say name, role, department, location, start date. What took 15 minutes of manual entry now happens automatically with HR reviewing and confirming rather than typing. Now, as part of phase two, let's bring in agent for leave plans, benefit, and compensation. Based on employee country, role, and employment type, the agent identifies the correct leave plan and compensation plan and assign them automatically. No more manual lookups across multiple policy documents. And then in next phase three, now with onboarding agent for employee experience, new hire onboarding can also be done easily. And As part of phase 4, you can also extend the agent to the full onboarding checklist, pre-joining task, new hire orientation, and onboarding coordination based on your organization need. The journey from offer accepted to worker onboarded is now orchestrated end to end against um, agent handle these mechanical steps and HR focuses on the human connection. Now, these four scenarios, what we spoke about regarding supply chain, finance, project operations, HR, same pattern every time. Diagnose the process, identify the verbs, move one verb to an agent, then expand. Each phase delivers measurable value that funds the next. And with that, I'll hand it back over to Nicole for or Mandy for the resources and next step.
Thanks, Priyanka. All right, thanks everybody for joining us. We just wanted to quickly share some resources available to you. These are specific Microsoft Business Process Catalog resources. So hopefully you're familiar with these, but if not, please check them out. We've got lots of good information out there. We also wanted to share some Microsoft Business Process Catalog and Mavim resources. I'll highlight here the free preview of Mavim that you can get by scanning the QR code on the screen. All right, that brings us to the end of our presentation. I think we can close out. All right, our next Tech Talk is next Thursday at the same time. We'll be transforming business processes with an agentic mindset for Azure and Fabric. So hopefully you'll be able to join us. Check out our blog here that has the most up-to-date schedule. This is where you'll find it. So please check that out and keep following us. And we hope to see you on a future Tech Talk. Thank you.